Investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this 21st, Tuesday, 21st of February. We're looking at the Dow down 420 at 33,407. Remember, I drew this line in the sand. I said this is the line, that midpoint blue line right there. If we start to trade under it, it says that there's a good chance that the consolidation is taking place and continuing to take place within the rectangle that I've drawn. And within that context, there's a chance that the 30,400 level is really important to hold, be really close to the cusp there. We're at 33,422. If we're looking at the S&P, the S&P also is down very sharply. The S&P is down 44 at 4,034. It has not taken out the 200-period exponential moving average support of 4,011, but it looks like it's going to, and it looks like this will be a peak G and not a G/C. We'll talk about that as we move into the rest of the show. But we are looking at the QQQ, the index 100, right on the 200-period moving average, down 397 at 297.12. We're looking at the IWM. Now, this is going to be important because the IWM was doing nicely. Then it got this pattern that I talk about. That's the H pattern. And it says if it takes out, closes underneath the low that was made on the 10th. Am I going to be able to see this? It's a technical problem over the weekend. And now I've come back and I've got these, the little tabs come back and all of a sudden they changed color. So it's almost impossible to read. Well, let's just say that if it goes underneath the low that is there at 188, if the IWM Russell 2000 closes under 188, it goes into the 187s, there's a good chance that the 186 at 185 200-period moving average support is going to be tested. Now, this is going to be very important right now because the SMHs, the semiconductors, who are doing so nicely, they made a peak D in the Chapman wave about 2 weeks ago. Now they're at 239, down 3. We're looking at the weekly chart, also at a peak D, holding in a rectangle formation. Going to be watching that at 239. If the SMHs, the semiconductors, which were doing fabulously, now stalling and digesting those gains, take out 235 in the next 2 days, that says this could last a little longer, this digestive phase. Now look at gold. This is fascinating, isn't it? Gold's only down 3 at 1847. That 200-period moving average I've been talking about for a little while now is beautiful support. It's right there at 1838. If we start to close under 1832 to 1828 support, that says, you know what? That weekly chart is finally seeing the price underneath the 14-period exponential moving average, and that says that the digestive phase could go on a little longer. Now look at this. The DXY, that's the dollar, is trading up 18 ticks at 104.04. Actually, the last 2 sessions, remember I spoke about the 200-period moving average resistance early January, where it popped up into the 105s, and then it pulled back immediately. I started to move down to 100.82. And then 3 sessions ago, I should say, it popped to the 104.70 area. And now look at this. It's just stuck there at 104.03. It's either trying to build strength to power right into the 105.80 or higher area, or else it could digest these gains for a little bit longer. Looking at the crude oil, the crude oil is at a terrible time. It's in the lower range. It's just in a narrow rectangle range in the lower range, which says that at some point it could very well test 69. And it's at 76 right now, 76.89, up 33 cents. But unless it can start to trade, can't just pop there. It has to trade above 85.80, 86.30. As long as it can get to that area and hold for a whole week or two, that's different. But I think the crude oil's kind of stuck. Looking at the TLT, which is the bonds, the TLT is yet again down. I'd drawn this in, but I didn't have a chance because I'd lost all my charts over the weekend. I couldn't get into my TradeStation program. There was something wrong with one of my workstations. So now everything's repaired. Thank you, Brian from TradeStation, for doing a great job getting me back without giving me a minor heart attack here. because I'm always afraid to lose all my notations. They're all done hand-charted. Nothing's automated. So now, I had this. Didn't I do this on Friday? Yes. Okay. So the TLT is down $1.90 at 100.50. So look at this. This is the TBT. And the TBT is moving to the upside. What I said, yes, I did it. I drew it into the TBT. That there's a cup formation. And based on my work, that the high that was made at peak D, in the fourth highest peak back on the 30th of December, and am I going to be able to read these charts? Why do they do that to me? Around about 32.60, that's the target in the next few days if there's a left side, right side price time match. And that's not very good for the market if the yields are actually pushing higher and holding the higher levels. Now let's get back to, we want to look at high-grade copper, there you are. Nice pop to the upside. Oh, this is interesting. High-grade copper popping to the upside. Therefore, I need to check wood, which is the iShares Global Timber and Forestry ETF. That's coming down. Big divergence between these international economic barometers. You've got copper rallying a bit, and you've got the iShares International Global Timber and Forestry ETF pulling back. We're going to be watching that very closely. VIX index, we need to get to the VIX. The VIX index is trading right now at 22.74. It's up 272. Remember I said if it starts to get to the 2270s, 2180 to the 2250s, that means that the price is going to, that you probably get strong triple digit down in the Dow. Well, look at this. It's up 275 at 2277. This is very important. We were looking at this last week, and I was saying, look, here's this gray horizontal line. It's been fantastic for the VIX index over the last 3 years, where it shows tremendous support, and then we bounce off that, and here we are once again bouncing. And I drawn in this very mild bowl formation, like a cup, but a flat cup. And now we're moving to the upside. Oh, I think we're in. The reason why for subscribers to opening call, yes, we did. I did get out of a position that I wanted to hold. It was a barometer for me on the work environment in terms of office space, et cetera, et cetera. I'm not prepared to be in anything that sits there like an albatross, just not doing what it's supposed to do. I'm afraid we got a lot of cash. We're ready to put money to work, and we have a plan to put that money to work. I want to be in a position that says, be free to do what you want. Don't be handicapped by being in a position that is not working. And that's the way it is right now. Okay, so a couple of questions came in. I said I'd do this again on Tuesday. This is LSCC. And this is Lattice Semiconductor. I said, just be a little careful. We'll be looking at it, and that I'd say take some money off. Just in terms of money management, it's still holding fantastically. The person who asked about it, Sharaf, was in a position from way, way lower down. So I'm saying, treat this as a digestive phase, but money management says take something off. It's just prudent to do that. And at 84.91, LSCC is trading down 219 at 84.89. I think the whole area of 81 to 79 could be it could be tested over the next couple of weeks. I'll be back in a moment. Basil Chapman, Tigers News Hour. Dow's down 504, S&P's down 54. I'll be right back. Oh, it's so nice to see my charts again. I couldn't do that for 36 hours. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back. So the question came in about cake. Let them eat cake. Cheesecake Factory, restaurants, never been one of my favorites. I don't know why. It's just, I like French patisserie. I don't like these cakey stuff. Anyway, so within that context, we're looking at a stock. I just want to get this. I've had to change a whole bunch of my automated notations here. So format, I like to make that a little bit style. I want that gray, make that a little bit darker gray. And what do I want? I want it settings, but settings, wait, that's not good enough. Display. Set as default. Oh, don't send. All right, there we go. Let's see what happens here. There it is. Okay, so you got your cup formation, and it's done a left side, right side price time match, and the weekly chart's now 4 weeks later since the high that was made at about 41.78, and we're trading at 38.43, holding extremely well, and that's really fascinating because when I went through a bunch of restaurant stocks last week sometime, I was kind of impressed that some had done very, very well. So now let me do this. If I look at this and say, what pattern am I looking at? I'd say I would grab, I'm hoping that this actually works. I've got the Chapman stalked. Oh, it hasn't worked. It doesn't matter. I'll change it right on the fly. Here we go. So that goes there. So what do? We say full color. I want yellow. And I want this to be formatted and make that set as a default style. Set as a default. Let's just see if I did that correctly. Yeah, okay. So that's Chapman stalk leg formation. You got your long leg, you got your oval body, nice and stretched out. It does not look like a rectangle because you've got a left side focal point that expands like a wedge. But then it becomes an oval because you make slightly lower high. So I'm looking at this and I'm saying this is either going to become an arch formation or it breaks one quick move to the 42s and then comes back into the oval pattern and then maybe takes it out. So this will be the leg. This is the body. The neck will be here and then the beak comes back in to the body. But in the meantime, it's holding really well considering the market itself. Cheesecake Factory is doing very well on a daily basis. Weekly basis, also quite impressive. Monthly says, a lot of work needs to be done. So all I can say is that at this, I don't know what the question is. Could I do an analysis? Yes. So in terms of the Cheesecake Factory, if it can last another 2 or 3 weeks without breaking under 36, that's 3 points low, 3.5 points lower. It's at 39 right now, but instead has at least 1 or 2 little quick attempts to get to the 41s. It's a 39.45. That means it's going to use up time, very valuable time, to go sideways, and then it can have a nice pop to the upside, and that pop could extend like a 1-to-1 propeller shaft, but I don't even want to get there. I have to say, until it can close above the high that was made right here at 41.28, I believe that is, I'm just going to say it's stuck in a range. It's consolidating. It's had a spectacular move. You can expect it to digest the gains. Would I add to it? Is that the question? No. I wouldn't be adding to any long positions right now, except for specific areas that are actually benefiting from this market decline. At the same time, I would consider adding to it if we can last another, even to get through this week. It's a shortened week, but even to get through not breaking 38 would be really impressive. So I like it. I like it because of what it's done. I am watching it very closely. It doesn't mean to say it needs to break out. It just needs to hold in consolidation phase. So I hope that helps you. NAT, which is Nordic tankers, had a big spike to a peak E on Friday, went to leg E. Today's confirming that it hasn't made a new high, but that high that was made, why do I keep checking? 3.87, I think it is, was the high on Friday. Wow, I wonder how I'm going to get the pattern, get it back so that it's a white with a notation that I can actually read. All right, so with it, isn't that interesting? Remember the the pattern Cheesecake Factory in the daily chart? Remember the cup formation that we were looking at? This has also made a cup formation. So here again, Nordic tanker. Let's look at TK, which is TK shipping. Oh, look at that. These shippers, with everything that's going on, the shippers are still holding extremely well towards the highs. That's the DSX, which is Diana shipping. Same thing, Peak D pulling back, holding the 200-period moving average. Doesn't look like the others, but they're still holding pretty well. So yes, this is very interesting because let's show you something else. In the crude oil says, well, the shipping, the tankers for shipping, not dry bulk goods or anything like that, but the shippers for the oil, maybe heating oil as well. Let me look at the HO, heating oil, pulling back right on the 200-period. The upside, and yet the tankers, because there's a different metric. There is time and price and availability, as well as the ports themselves for deloading. So I think that it's a slightly different thing. I also think, having looked at them last week as well, that the shippers are saying this is an extended move up, and that there's a good chance that they take a bit of a digestive spell over the next couple of days. We'll see. But so far, they are really holding well. In fact, they are the group that are showing us quite a bit of strength. MIR, I can't believe this. MIR, Mirion Technologies, detection, radiation analysis, plus monitoring for nuclear defense and medical resources and end products. I had this in our sites for subscribers to my opening call. We did have it. We were long, and we took a tiny loss at 6.65 back in December the 28th. And look at this now, up at 917, and it never stops. This is not an E. This is an F/B. Unbelievable, trading at $9.14, up 39 cents on a day like this. This is up 4.5%. Wow. And I was afraid to get it because it looked like it needed to digest gains. What a breakout this is. Look at that. That is amazing. Mirion Technologies, for those of you interested, trading at 9.15. MIR is a symbol. GLOP. Let's see what GLOP's doing here. Oops, don't type GLOP on the page. Do it in the little rectangle right there. GLOP. Galapagos? No, this is GLOP. Oh, look at this also. You would think after a huge gap like this that GLOP, which is Gaslog Partners LP. Gaslog Partners. I have to look at this. Gaslog Partners. I'm sorry. I just have to look and see what the heck. Gaslog. I think I've got that. Partners does. Yep, Gaslog. We are a growth-oriented limited partnership formed to own, operate, and acquire liquefied natural gas carriers under long-term charters. How do you put this together? Because look at natural gas. Oh, did I got that in the wrong place? Let's look at natural gas as we go out to the break. Looking at natural gas. Oh my, I can't believe it. Natural gas has gone in a straight line down from August or so at 11 down to today's low of $2.18. UNG for those, the Widowmaker, right? Oh my, at $7.22, and yet Gaslog is up.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
There's a question came in about KEX, K-E-X. This is called Kitty Core. I don't have to know what it is doing at the moment, just I need to finish doing the chart, so that's A, B. Now, if you go really sharply up to an A, and then you pull back just modestly, and then you go to a very small B above it, and then you pull back, and especially if it's in a cup formation, you've got to do a measurement of the left side, right side. This is a technique oh, no. All right, I'll fix it up. So what does it do? Let me just, give me 1 second here. I need to change this. I thought I'd already modified it. So format arc. So the arc says, I do not want to display the trend line. I do not want to display a full arc. I want to show the style. I want to make it kind of a darker gray. That's not, I think it's too dark. I want that gray there. And I want to make the weight that weight there. Okay. And I put set as default and wish me luck. There it is. Okay, good. So now we're going to get the right. I just had to do all my notations had to be changed because they gave me a new, what did they give me a new? Well, they didn't give me. It's a new workspace. I had a problem with the workspace, I guess. So in doing that, all the things here at the top, all these notations, up the pluses, the trend lines, Fibonacci, everything, all the up arrows, etc., I had to put them back, and I don't know why it's all down here. Oh boy, there's always something. So anyway, what I like to do in a case like this is I like to go from the left side to the right side, and I just do it. I'll have to make that a change as well. All right, and then what I like to do is to say, on this, I can't do that. This has to be thicker. Style, that's okay. I can make that light, but I do want to have weight. I want a little bit more weight. And I'll give that set as a default. There. Okay, and I usually use that as a, there. So what we're looking at is the vertical aspect tells you, right there, tells you that the MACD starts to turn down. The stochastic's still very good at 84%. The on-balance volume is pulling back. The relative strength is pulling back. The 9 is way above the 14. But everything about this says, uh-oh, Kex, which is a kitty core, and I don't know what they do, but the chart says it's a familiar type of chart, that it's in the rectangle formation and can continue sideways, maybe with higher highs, slightly higher highs, and slightly lower lows. Look at this beautiful trend line that we've got here. Straight line, huh? Straight line there. So this trend line here, oh, I've got to change everything. Doesn't matter, I can do that. It's not like it's a big problem. What is a big problem is that it's taking a little more time than I expected. So I want the color to be gray, and I'm just going to use that as a default for the moment. Set right, I don't know what it is, extend to the right. Okay, and now we've got the same thing. So we click parallel, and you got yourself parallel, look at that. Yeah, you've got yourself a channel, an up channel. You've got right here, you've got new parallel, like that, red, put that here, make that green. Okay, and all I'm doing here is I'm drawing the Chapman wave inside track repellent zone, and it's the same thing at the bottom. We don't have to do it just at the bottom, and it got repelled, and it says, yeah, be prepared that at 71, it could test the 68s. That'll be the next level of support. All right, with that said, let's continue. I'm going to save everything. I've just been through too much to worry about that. So here's another one. Indy came up as a screamer. Also didn't take this. And look at that. I had this notated when it was at the 200-period exponential moving average. Indy semiconducting. The way that some of these semiconductors have independently moved to the upside, as if to say, you know what? I don't care what the semiconductors as a group are doing. We are independent. We have tremendous support, and we're doing well. So this is now G/C. Look, G/C, and then this goes to a D, and it still holds only down 16 cents at $10 today. This is quite remarkable. I wouldn't have said that it would keep going like this, independent of the semiconductors, although they've done well. This has done way better. I mean, this has gone from 550 to almost a double. It hit the 10s yesterday. Today, even it hit 10.06. It's trading at 9.98. So this is fabulous action. So don't think this is just a general market that is going to fade. Everything's negative. I think that there's rotation going on. If you look at a Home Depot, yes, a Home Depot. Horrible action under the 200-period moving average, made a peak in the daily at about 360. What was that? 360. Right there. 347.25. Now it's trading at 302. The weekly chart, I had the rectangle set in. It's gone. It's the dreaded H pattern. Look at this. Lowercase h right there. And it takes it out. Look at that. Big plummet to the downside. weekly chart says just be careful. You can see the same thing even in the you don't really want to see this in the monthly. And this is just saying overall, there are so many conflicting patterns that you've got to respect each chart individually. And if you look at the HGX, which is the HGX, the Philadelphia housing sector, this had an alternate count, the G/C, right here. Let me just raise that up. There it is, G/C, and it does look like it's fading at a peak G. Whoa, I didn't mean to do that. I'm not used to the settings in the places they are at now. It's like a musical instrument. You just get used to the fingering over and over and over. When it changes, you have to really think it through. It's like going from B-flat clarinet to the bass clarinet. Huge difference, big instrument. You got to get those fingers in the right place. All right, so what are we doing here? We're looking at a Philadelphia housing sector index is trading down 11 at 439. Be careful. This is just saying everything's not. It was a fantastic rally to the high that was made at the end of January, beginning of February, and now it's having a digestive phase. DocU in the den. Who put that in? DocU. Phil says DocU. Was it Polar? Yeah, Polar. Made a peak D. It's pulling back. DocuSign had a beautiful move to the upside. Thursday we were looking at it. Friday it pulled back a little bit. Well, I did my show prior to the open, but I said be careful. And now we've got a peak D in the daily, a leg D, a possible peak D in the weekly chart, and the monthly still looks horrible as it has all the time. A question came in about AN. Now this is this is AutoNation Inc. does the auto sales. I always listen to the guy who I can never remember his name, but I'm absolutely always impressed. And I might be mistaken. Maybe I don't hear everything what he says, but when I do hear it, I think, wow, this is a straight shooter. This is a guy who just tells it as it is. Because I know I've heard him before when he said, no, things are really not very good. I don't like what's happening. And I've heard him say, even under these particular conditions, the last time the earnings came out, I was quite impressed with the way he went through the whole vernacular, how he spoke about the different sectors, etc. Whatever his name is, I am impressed at the action. It made a leg D on Friday at 150 right here. This is AN AutoNation trading right now. Trading right now at 147, and on Friday, I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, so there's a question. I don't remember where I was prior to let me stick with the trend line. I do not want the trend. Set display trend line. No. Set as a default. Yes. Okay, got it. So you remember we were looking at this is the E-mini right now. It's in leg C. It looks to me like a lot of the selling pressure at this particular stage. Remember, I like to look at the day as phases. It could be 3, it could be 4, it could be 5 phases. To me, this is already the 3rd phase of the morning. And I think that right now there's some relief that's going to be attempted to have a bit of a rally. I wouldn't be surprised if we try to get into at 4,038. I wouldn't be surprised if the 440s is attempted. But to be able to make this a turnaround session, and it's not impossible. I'm negative in terms of the market itself, but there are some sectors that are just refusing really to go down as sharply as they normally would under these circumstances. And that to me is very impressive, especially the ones that we're trying to buy. They haven't come down to our levels, but I'm anticipating that they will. You're going to have patience. Now, the other thing is this, that within the context of, look at this pattern right here. You had your rectangle, you had your big arch formation, you took it out, and now the low, it's starting to see the histogram improve a little bit in the 10-minute chart. The 1-minute chart has already seen the technicals improving a lot, but not the on-balance volume. I need that to move, and it's not moving. So I would just say on a daily basis, going into the close today, if, in fact, the S&P is down 50, if instead of moving to a minus 35 to 32 a little later in the day, saying, oh, maybe we have a little bit of a bounce going into like Friday, a little bit of a relief rally to the upside. Instead, if the selling starts to intensify, and I can anticipate something like that with Home Depot being down so much, it's selling us, and the Philadelphia Housing Index, it says that there's a lot of selling pressure out there, and bonds have risen. But I'm just saying, if instead of being just minus 35 to minus 32, just alleviating some of the selling pressure, I normally would say 130. I'm going to make this different. I'm going to say at 12 minutes past 2. If at 12 minutes past 2, the S&P is more than minus 59, and the Dow, which is down 430, is more than down 470, I think there could be a really ugly close. So those are the parameters, and I'm going to add the VIX here. So let me just add the VIX to say, if the VIX, which has really had a big move to the upside already today, it's good. Oh, I'm in the wrong place. Right here. Okay, the VIX index. So wait, let me just, before I change this, this is Fast Inc. Remember, scalable sites and digital I knew if I typed in EXP, I would say, whoa. It was so clear at the time. Digital experiences on EXP. Here, So it's down $1.28 at 14.63. It did make that peak F because it's down again from Friday and today. And it just says the 1380 to 1320 should be very good support. If it's not, that's a problem. But so far, it's in the area that says, chart-wise, keep an eye on stocks like a Fastly, FSLY, to see whether or not they indicate that in certain sectors, there's enough buying pressure to have another big bounce. So that whole area of 1464 right now goes down to the 1420, 1380 area. That's going to be important. If it takes it out, it says, uh-oh, not now. But if it holds, it says this is a place where you can suddenly see a bounce. So the VIX index trading at 22.61, up 259. So this is a leg B. It doesn't mean too much in the Chapman methodology for the VIX index because it's an emotional metric that we're looking at here. But it is a leg B, getting close to 2331, the 200-period moving average. If at any point between Tuesday today and Wednesday tomorrow, there's a push above 2340, above the 200-period moving average of 23.31, it says be careful because the selling pressure could be held into almost the whole week. There won't be much relief. So with that said, I got that. I wanted to say, yeah, Exxon, we always look at Exxon. Exxon is finally, if I can just type here, there it is. ExxonMobil trading right now down 8 cents at 111.21, made a high at 119 area just 2 weeks ago. Now it's at 111. Not a big deal, but I am saying that I would look at Exxon and say it's in the area that's somewhat vulnerable after a spectacular move. Really, when I say spectacular, I'm just talking about in 22 alone, it's gone from 60 to 120 almost. So that you've got to expect some kind of a digestive phase. That's that. And the next thing I want to look at here is, where did it go? Where did it go? Questions came in. Could I look at, oh, that's right. This is going to be very interesting. Crocs. So as I said, in certain areas, the public, the general public has still been pretty active. And you go to any shopping center, anywhere, I'm hearing from people just all over the country saying their shopping centers seem to be very full. I don't know if people are actually buying, but the shopping center, maybe it's because of winter and people need to get warm. But look at this big spike up. It's trading now Crocs, which is Crocs Inc. footwear. A monthly chart only went to a B at 183 in November of 2021, plummets down to the 40s, then has a pretty decent bounce. And the bounce on Friday went all the way into the 140s, it's trading right now at 125.63. I think this is almost like a rogue wave, that it's more like a right arm extension. So this, I'm calling it for now, I'm calling it a G. I could be wrong. I'm calling, and that F should have had a down arrow because it did go underneath the 200 period, 14 period moving average. So this just says even a stock like Crocs, which is obviously been doing very well, has an alternate count, a G/C in the weekly chart, a G in the daily. I can't call it alternate count at this point, not at the moment. It's holding very well after the spectacular move, especially the last month going from the 90s to the 140s. I mean, that is fabulous. So it's digesting the gains. All right, that was Crocs. So would I be shorting? I don't know if I'd be shorting stocks that would be making new recovery highs or yearly highs. But on a very short-term basis, it's filled the gap. And I suspect if the market is generally weak into the close today, then Crocs will test the 110 area. Well, 12.10% if you want to do that. I'm just saying this is not the kind of stock that I'd be shorting, not at this particular time. A question came in about would I look at applied materials? Applied materials, just an analysis. Yeah, so the question is that a peak C or is that an alternate count? So Technical Friday is Technical Friday, but I'm going to do it today. Why? Because it's so important. A stock like Applied Materials in the semiconductor area, one of the leaders in the area usually, all I'm saying is that within the context of notations, that has the look to me of a peak D. but it had an instant restart, but then after it went lower than the trough D. So I can call this an alternate count A, B, C, and call that a D, and that says, uh-oh, you're coming back to 108 very soon. I'll be back in a moment.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back and we've got with this final segment to go. So Applied Materials has got what I call in my parlance, the Chapman Wave unconventional flat-based restart to 106s. If this alternate count with the very large pink lettering is correct. I think it is correct, and I suspect that the digestive phase is going to take it to, it's 113, but at least to 108, maybe to 106. That's the way it's looking. Not only that, in the Chapman Wave methodology, remember there's a particular technique. I'm always looking at three core patterns. I'm not going to call them, whoops, where did that go? There it is. So these are core patterns, and within the context of just looking at straight lines and cups and arches, there's a pattern that I talk about that's like straight line up, straight line down, or cup formation, or arch formation, or a mix of 1 and 2 and 1 and 3. Here's 1 and 3, and you can see straight line down, and then it makes an arch formation, and it's testing the left side low. If it takes it out, and within 3 days it's not able to close nicely above that left side low, let's call it, just for the moment, call it about 113. Say we go to 112.30 or lower, there's a good chance that this Chapman Wave inside wedge target support line is going to be tested, and that takes you to the 110 area. So I'm watching this very closely. Now, within the context of rallies that fail, we're watching right now look at this. Here's the E-mini. It's just making, look at this, low lows all day since we opened. It's had a little bit of a spike up at about just 9:30 or so, and then it started to fail. And all we're doing is making lower lows and lower highs, which is the reason why I said I'm not going to change stops, anything, in any positions, because they always get taken out. Whatever you think you're doing to save the day, don't do it. Just take it out. You just start thinking, like that. This is the leg G to the downside. Keeping our count in the 10-minute chart. Just be real careful. And as I said before, if the Dow is not holding very well, the VIX index is moved to 22